What is a non-registered account? That right here, right now. Stay tuned. I'm Rob Tetrault from robtetrault.com, Senior Portfolio Manager at Canaccord Genuity Wealth Management and the Tetrault Wealth Advisory Group. This topic is a good one. We're looking at what a non-registered account is. Maybe you don't know, maybe you know what a registered account is, maybe you've heard of the different types of registered accounts, or maybe you've heard of a margin account. You don't know what to make of this. We will break this down for you and explain it right here. Before we do that, take a quick sec, maybe like, subscribe to our YouTube channel. If you're watching this, give us a like, a comment. We'd love to hear your thoughts on it. Don't forget to share. If you'd like to book a no obligation consultation, please go to www.speaktorob.com. We'd love to book that for you. Two types of investments accounts generally. The first type, registered accounts. Registered accounts are all accounts that are typically will start with the letter R, so RRSP, RIF, RESP. So they're classified as registered because the government registers them, and they compound and grow tax-free. Those are your registered accounts. The TFSA's in there, the LIRA's in there, the LRIF, the PRIF. All of those accounts are in the registered basket, okay? Typically, there are rules for drawing, for contributing. You get a tax benefit sometimes. You'll get a grant for the registered assets. That's not what we're talking about here today. If you have additional funds, a non-registered account will often be either described as either a margin account or a cash account. Most investment firms will have one of those two designations. They are both non-registered accounts. You can also have US dollar non-registered accounts and Canadian dollar non-registered accounts. Most investment firms will open what's called a margin account. The simple reason being that you could borrow off your investment should you choose to ever do so. Cash account or margin account are both classified as non-registered accounts. The key here being that these are after-tax dollars owned by an individual or a corporation. That individual has prepaid the tax on this. This is after-tax income and is now investing that capital to gain returns. The key thing with a non-registered account is that it is taxable. If you happen to make capital gains in your non-registered account, 50% of that capital gains gets added to your income, and you have to pay tax on that. Any interest income coming from bonds, typically GICs or even debentures, that gets fully taxed. So it gets added to your income. So the key with the non-registered account is typically it's dollars that you have in addition or after you've already made your TFSA contribution, any RSP contribution that you would make, and any perhaps RESP contributions that you would make. Typically, non-registered accounts are for individuals or corporations that have accumulated wealth in addition to their registered account. So if you're young and you're saving, your first dollars are going to go to either your RSP or your TFSA. There's no reason to have a non-registered account if you haven't considered filling up your TFSA or your RSP. If you're in a high tax bracket, you'll want to fill up your RSP first. If you're in a low tax bracket, but you're accumulating wealth, you'll want to fill up your TFSA first. But in either situation, you are not contributing to a non-registered account until you have fully maxed out at least one of those and likely both of those. If you have enough wealth that you're accumulating and you're now building a non-registered account, that likely means that you've maxed out your TFSA and maxed out your RSP. But at a minimum, you should have maxed out one of them. Typically, a non-registered account contribution will come after you've filled out all those buckets, all those accounts. Now, what do you need to consider if you have a non-registered account? Well, some of the key things are tax. We talked about tax earlier. So one big thing that I would suggest that you make sure you remember is this typically needs to be a liquid account. You don't want to start locking stuff in for 3 or 5 or 10 years in a non-registered account, because that's typically going to be the first access to capital that you're going to make should you need dollars down the line. You're not going to want to withdraw from your RSP, and you're not going to want to withdraw from your TFSA because those are sheltered. They're growing tax-free. The non-registered portion is taxable. So if you have 100,000 in your RSP, 100,000 in your TFSA, and 100,000 you're non-registered, and you need $50,000 for a bill payment or for a trip, you will likely be taking those dollars from your non-registered account first because it's less tax favorable than the RSP and the TFSA. You're certainly not going to want to take it from your RSP because then you have to withdraw that as income and pay tax on it as you're withdrawing. You're definitely not doing that. So the non-registered account, again, it's non-registered, meaning it is not an RSP, a TFSA, a RIF, a LIRA, any of those registered accounts. It is taxable. It should be extremely liquid. You can put money in, you can take money back out. And remember that you're going to pay tax on the interest, on the gains, and on any dividends that's accumulated in there. Make sure you remember that if you have non-registered investments, the most tax efficient investing that you do should be in that account. So if you happen to own investments that pay return of capital, or if you have private real estate investments or some of the stuff that we do for our clients here, we want to make sure that we consider the taxable implications of every investment as we decide which account to put it into. Now, there is no limit to how much you can contribute to your non-registered account. If you've got $10 million, you can accumulate $10 million in your non-registered account. And typically what will happen over time, for those of you that are in the 1% and are growing your wealth at a phenomenal pace, eventually these non-registered accounts will form the biggest portion of your net worth. All right, so that's it for today, guys. Thanks for tuning in. And don't forget to go to www.speaktorob.com if you'd like to know how this fits in with your total global wealth picture. And if you'd like to book a no obligation consultation, www.speaktorob.com. I'm Rob Tetrault from the Tetrault Wealth Advisory Group and Canaccord Genuity Wealth Management. Thanks so much for tuning in. We'll see you in the next video.